Hey everyone, Ben Herden here from Mortgage Choice Gymea again. I hope everyone's going well. Today we're speaking with Andrew Bloom from Sanders Real Estate in Janelle. Welcome Andrew, and thanks for your time.
Hey Ben, how are you?
Great, thank you, great. There's big changes. It feels like everything's changing for the positive, and we're seeing open houses and auctions start again this weekend. How do you feel about that?
Yeah, look, it's nice to sort of come out of that sort of, lockdown sort of state that we're in. I think doing open homes is going to at least take a little bit of pressure off some logistics for people. I
Yeah,
don't think it'll make too much of an effect on how the market's performing currently, though. I think there's going to be an element of people that want to still see the property, realistically, away from other people, because not everyone's comfortable with, where things are at from a health point of view.
no, that's right.
There'll be some strong restrictions still on what we're doing in relation to open homes. That we still have to adopt to some standards around social distancing, obviously health and safety around hand sanitizing. And we do have to record everyone's details in full that walk through the property, just from a tracing point of view if there is any issues. But I think, so there will be an element of people that really enjoy being able to just come to an open home that's already advertised, rather than trying to, organise booking one. But I still think we'll still see a good chunk of people that actually prefer that private appointment anyway. So the good news is we can do both anyway. So we should be able to adopt to all those changes.
So is that what you've been doing up to this point? Is it just one-on-one tours
Yeah,
essentially of a house?
very much. It's been a refreshing change, and it's been back to a bit more old school. I think some of the buyers that were window shopping have decided not to have a look around, but the serious buyers are still out there, and most definitely have they been, still interested in looking at property. And as an agent, I think if you're selling someone's home, translating how that could be the new home for the new buyer, spending that extra time with them is always a good thing.
Yeah. I'd imagine that helps you get to the bottom of what people are looking for as well. So it's it'd be a better all over service, I would imagine. Anyway, I haven't been to any open homes myself, but I just imagine the service and the relationship between everyone would be just a little bit deeper.
Yeah, it has been. You've been able to get to the bottom of things, and we've done a few properties where we've gone from one house to the next to compare. So very much more old school style selling.
Yeah.
But it's been working really well, actually. Yeah.
That's good. Sounds a lot more labor intensive for the agent.
Yeah, logistically, there's been a shift in how we do things. Certainly, there are certain ways or routines that I think a lot of agents were in.
Yeah.
I think, but ultimately, like any business, you adapt, and we've been able to do that. And it's been, I've been probably getting inquiry from people via text, via phone, via email. So there's been, a lot of changes around how we communicate with people.
Yeah.
But all in all, it's working pretty good.
Yeah, that's really good. It is amazing how quickly people have adapted to technology and new techniques and just new ways of doing everything. It's amazing.
Yeah, well, I think one thing, certainly from my team's perspective, we put a lot of energy into a lot of the digital platforms prior to this happening anyway. So we were probably in a much better position than we realised when this happened. So that's been nice to have that there.
Yeah.
But you're right, the industry has been doing a lot of catch up and getting involved in doing a lot of digital things. And like all things, when the business is forced to change, you come out with some things better. We've got a lot of digital signage now with DocuSign and things like that. And
Yeah.
they're things probably we should have really employed like ages ago anyway. So to have them now in place is, we'll be better for it forever. So it's good.
Yeah, I agree. These forced changes have created a lot of efficiencies, which is a win for everyone. I'm actually quite enjoying that. Have you seen the market change?
Oh, sorry.
Sorry. Have you seen the market change over the last 4 or 5 weeks, however long it's been now?
Look, I think there was that initial shock factor, which is normal. I think everyone went into a bit of shock, and the real estate industry was trying to work out what it could and couldn't do. And I think every day things were being, and because we're such a physical, connective, we are essential service, but there's a lot of, face-to-face meetings and a lot of crowds involved with auctions, and especially the market was, probably at its peak of all peaks. So, we're certainly one of those industries that needed to change. And as those rules came in every day, it was changing. So we were constantly adapting to what we could do. So the first couple of weeks was pretty intense as to work out what we could and couldn't do. But once we got that new sort of level of what we could and couldn't do, it's been pretty easy to help people still buy and sell property. So the market's probably taken a little bit of a decrease due to some less competition, and probably, well, as you will probably share with us, some lending changes, but all in all, we're still getting really good prices. And fortunately, the market, I guess if it had to fall from somewhere, at least it's fallen from the highest of all highs. Start of this year, we were probably higher than we've ever been. So to fall, maybe 5 to 10% range, depending on properties, is not a bad place to come from.
Yeah. We've seen a lot of in March we were flat out just before this all happened. We were really busy, but then in April everyone just pulled their heads in. There was nothing happening. A few people trying to refinance, but it was quite tough to get the finance at the time too. And people just pulled their heads in and they only did it if they had to do it. But in the last week or two, we've started to see more and more people coming out, and we're seeing some really good, genuine buyers come out, getting pre-approvals and just getting themselves ready. So I think the general feeling is that this is all getting better, and there's a feeling of positivity in the air. And I'm seeing less people applying for hardship and asking lenders to stop their repayments, and more people trying to move forward again. So I think we're going back to where things were quite quickly.
Well, that's it. We found the initial shock was something that all sellers and buyers sort of had to adopt, including ourselves. But fairly quickly, we had to chat to a lot of sellers and saying, well, look, if the market has fallen a little bit, what are you trying to do? And, in a lot of cases, people were thinking about upgrading.
Yeah.
Now, in a falling market, it's an upgrading opportunity like never before, because, the everything's fallen. But, you might take a little bit of a loss on the one that you were hoping to get. But ironically, the one that you're chasing has fallen by the same percentage roughly, and therefore is probably closer to you than we'll ever be. And knowing that the market will recover over time, and therefore that equity will return. So, for a lot of people that are thinking of upsizing, they were just like, it's now or never kind of thing.
Yeah.
And whereas just simply waiting and saying, I'm just going to ride it out to the bottom and then ride it back up again. I mean, if you're upgrading, probably you missed the boat. And if you sell in a market that's falling and you're able to wait a little bit, and if the market continued to fall, well, then, then you're only winning a bit more again. So, but no, we've had, in the last 4 to 5 weeks, we've had, constant sales, and we've had some real success stories where clients have downsized previously and decided that was maybe a step too far. And we chatted about, well, now's a good time to upsize. We end up selling their villa for more than they paid for it a year ago, and they've managed to secure a property back in the suburb they came from. So for them, it's been a dream come true. So,
days,
I think in all markets, whether it's finance or real estate or whatever it is, I think when it's a moving market, there's always an opportunity for someone depending on your circumstances. So very quickly, I think we've worked out that, it's opportunistic for a lot of people once they understood what that meant. And then there was that double checking with people like yourself as to, okay, well, how's my situation with finance, and how are you finding loan applications? Are you finding that there's been an increase or a decrease since the dust sort of settled?
Well, apart from those few weeks where people didn't really do much, we're absolutely seeing an increase now. We're also seeing the lenders, though, tightening up or getting a little bit scared or pulling out of certain markets. So if you, for an example, if you worked in hospitality, if you worked for a pub or a restaurant, or even in aviation, just something like that, the lenders are very wary. So if you had a casual job at a restaurant, pretty much they'll just say no at the moment. The mortgage insurers will say no. So it really does depend on the industry and the types of income you're getting, whether it's base income or commission income. The mortgage insurers have tightened up. But having said that, the vast majority of applicants we're seeing are getting the loans approved, getting them approved relatively easily. We just need to do a little bit more work up front to make sure it fits all the boxes, because nobody wants to submit a loan that's going to get knocked back within 10 minutes.
And are you finding people that have got pre-approval before, I guess, everything started to occur, that are running around with that pre-approval in place? Are they still able to exercise? Are those loans then going through okay, if they find something that they try to secure?
Well, not all of them. So we had a few people working with Qantas. That was a good example. Right when this started, Qantas laid off a fair few people, and the banks would pull the pre-approvals on that. We're going through all our pre-approvals and speaking with people, making sure they haven't been affected by the lockdown. And if they haven't been affected and they can show that, the lender's got no problem with it.
Yeah, okay.
With honouring the pre-approvals. So we haven't had a position yet where a client has been surprised to find that that they're out of a pre-approval or out of luck. So it hasn't resulted in any real pain yet.
We're noticing a lot of 5-day cool-offs in properties are being extended to 10. They're saying basically the feedback we're getting is the banks are a little bit slower on just getting all that together. Is that more probably a relation to the fact that they've got less staff going into the office, so everything, I guess the wheel's turning a little slower?
Yeah. Normally, I wouldn't give lenders the same benefit of the doubt that you'd give other businesses. But in this case, everyone is really trying, and you've got assessors working all over Australia from their homes trying to get this thing done, and they're not working in the normal team environment, which is the same with most people. But with a loan assessment, it goes through like a conveyor belt style of system a lot of the times. So it's just hard. So some lenders have blown out to weeks. So they can take weeks. But other times we submitted one Friday afternoon and had the full approval on Monday, a full approval, valuation done. It was just crazy. So some good stories coming out of it.
With regards to submissions, are you finding there's extra steps now that you would have to do? I mean, obviously, I know, probably 6 months ago, the bank certainly they looked into your personal spending and things like that a lot more detail than they did before. But since then, and I guess since this COVID-19, has there been any additional steps they're doing, or is it pretty much still the same? They're just double checking everything?
There's additional steps in that they're asking about COVID-19. So asking if you're going to be impacted in any way, like if you're on reduced hours, for example. So you can't slip in an old pay slip or, and try and pull the wool over their eyes, because they're going to look into it 100% of the time to make sure that everything is legit. So clients will often come to us and try and leave bits of the story out in the hope that it'll go through. So the onus is now on brokers to ask more questions and document that, which is a good thing, because we don't want our clients suffering any hardship because of this. And the banks are doing the right thing in that respect as well.
Yeah, and are you finding, I guess, a big question that's come up, we've seen it in the press a little bit, about if things were to continue and some of these, grants are available, like, for example, JobKeeper. If someone's in a position where they're able to receive the JobKeeper, does that help towards any applications, or is that not a factor?
No, that's a good question, though, because it is a factor. Some lenders will accept it. Most don't seem to be accepting it, because it would indicate that you're impacted by COVID, I suppose. So they're being a bit conservative. But other lenders will accept it in certain circumstances. I suppose it will depend on how much, as a percentage of borrowing, of the value of the house, things like that. But some lenders are definitely accepting it.
So for people that are thinking of it, obviously with the market being a little bit reduced in value, there's going to be an expectation on, and the big question, will it continue to fall or will it stay where it is? We've probably seen in the last 2 weeks, we've moved into a bit more of a neutral market. Yep. And the reason we can say that is that, first of all, everything that we're listing is selling. But just taking us outside of that, the Sutherland Shire stock levels in the last couple of weeks have only risen about 14 properties across the whole Shire.
Well, I was going to ask you about that, actually. That seems low, doesn't it?
Yeah, and and people are saying, oh, there's no stock. Well, that's actually not quite true. It did raise from around the mid-6s, which was earlier in the year, which is where we were getting that huge competition. It's into the early 7s now, but it hasn't. So it has gone up from when this all started, but it hasn't changed a lot, and it's kind of holding, which means what we're seeing now is that all the properties that are coming on the market are selling, or at least there's enough selling that's also entering the market. So we've kind of moved through that shock factor into now a real neutral market.
Yeah, and I'm actually surprised to hear that. I'm surprised to hear that.
Yeah, I thought most people would be.
The listing's gone up a little bit,
It's gone up a little bit. Everyone's got the story they're telling themselves is there's no stock around, but it's not true. It's actually gone up. So, but it hasn't gone up dramatically, and it's kind of holding. So that really shows us that, I guess buyers and sellers are agreeing. Everyone's kind of being very fair around things, and we're getting some, very positive results that are still, in comparison, really strong prices. There is a small reduction. We know that. We know that it's hard to say how long that will last. And I guess the bigger factor is with unemployment, how long before people suffer and we find things like their loan applications change and their ability to spend reduces. And then that might have a bigger impact on the market falling further. But if it was to do that and people were in that position where they hit that sort of mortgage stress, what do you think, like, what's the story with banks there? Like if a client particularly needed to get mortgage relief, we know that's always been a thing that banks offer, but they're obviously advertising a bit more now because it's it's a good PR thing to do.
Yeah, it is. Yeah.
But with regards to that, what does that really mean to someone if they did take that on and they freeze their mortgage and they're able to do that? What does it mean when things get better? Do they just catch up with higher repayments, or does it just add on to the time of the loan? I mean, how does that work?
It's a bit of a mix. So the ones I've seen so far, the lenders are helping the clients by freezing the payments from between 3 to 6 months. Uh, and maybe they review it after the first 3 months to see how things are going. So they're definitely trying to help clients cash flow. They're genuinely trying to help, which is a great thing. But then whatever is owing is going to be essentially added onto the loan, and the client will have to repay it over the same term, over the remaining term, I should say, of the loan. So the ongoing repayments typically will be a little higher.
Okay. So they do play catch up.
So you play catch up, yeah. So it doesn't. You'll still pay the loan off in the same time. Now there may be some lenders who are extending the term, but to me that would trigger like a credit change and a new assessment. So I'm not sure how they would legally do that. I think if people are suffering hardship, they need to speak to the lender and sort it out, take what they're being offered, and then we can sort it out in 6 months. So if the repayments are just a bit too much, we can restructure.
If you have savings in your, in an offset account or something like that, does the lender say, well, look, you'll need to exhaust that before we would help you with hardship? Or is that something where they say, no, we're happy to help you now because you need help now?
They certainly would have once upon a time made you use all your wealth to get in front before they freeze it. But now they seem to be freezing it. So I'm sure there are some stories of lenders asking people to do that. But I've seen a number of my clients with an offset account or redraw, and the lender has just done the right thing and frozen the repayments. Okay. Simple as that.
That's a real positive sign. We saw some stats out which are obviously, just predicting that potentially across the Sydney Basin area that, in potentially around the October time, we may see some extra, I guess, mortgage stress from people. And they were sort of saying the Sutherland Shire would probably be about 2% of people would be in that situation. Yeah. And they weren't really indicating that banks are going to seize assets and things like that. But I think it's more that they were thinking that some people just won't be comfortable in that situation if they're in it. Yeah. And they might opt to, potentially, move on, downsize or reassess their situation. So I don't think we're out of the woodwork yet. I think we're still going to see some financial constraints. And at the moment, we're seeing a lot of people have either know where they stand or are being supported in a way where they're comfortable. But, I think we still need to get through, once we come out the other side of, I guess, all the relief that the government's putting in, and then see where people really stand.
Yeah,
how are you finding, are you finding that people are planning for that now?
I think the people that have asked for the help and genuinely need the help are planning for other things. Like it's more just trying to keep businesses alive or, just trying to keep the cash flow working for now, and they're not thinking 6 months in advance. I think a lot of people will need to restructure finances in 6 months, and maybe even get some financial advice about how to get in front. And like we certainly haven't seen anything like this in our lifetime. Like it would be the Great Depression was probably the last time we saw something like this. So we just haven't been through it. And I think it's going to be a wake-up call for a lot of people to pay closer attention to the finances and financial planning and just get everything bedded down. And it's going to be really interesting to see how habits change long term.
Well, we're thinking too that the market will find its new home. It may be where it is now. It may not fall further, or it may go down. But I think one thing that's going to have a factor that I can see, and it's just my opinion, but ultimately I think if unemployment is to rise like it has, and then people are forced to seek new employment, they're going to probably take on a new job. They may take a pay cut to enter a new workforce. And then if someone wants to then move into the marketplace to buy again because they had to shelve that because of what's going on, how long do you think it takes, what does a bank need to see from a time point of view for someone that's maybe got a new job or about to get a new job or in the future gets a new job? Is it 6 months? Is it 12 months of employment? Like what's really required?
No, it's generally not that harsh,
Okay.
When you start a new job, most of the time you have a probation period, which might be 3 to 6 months. And some lenders will want to see that you're outside of that probation period. But if you're in the same industry that you've always been in, there are some lenders that will just ignore that. So you could turn up with one pay slip, so be in the job for one pay cycle, and you'd be okay. So there's certainly the possibility of getting finance more or less straight away.
Okay, great. So that's really positive, I think, because that'll probably dictate a lot, I think, how quickly the market recovers too.
Yeah, it will. It will.
So just from Step's point of view, when we're meeting new buyers out there that maybe don't have finance yet, Ben, what would be the process? So normally, once upon a time, would be maybe call a broker like yourself and go and pop into your office.
Yep.
If someone was new to things now, what kind of new steps with the current restrictions you've got? How do you go about helping them get from?
Yeah, it's a good question too, because my office, we're all working from our individual houses. We've got internet phones, so it feels like we're together, and hopefully from a client's point of view, it feels like we're together. The steps haven't changed, except that we would do a Zoom meeting as the face-to-face rather than actually getting together at this stage. So it's still quite easy, and we find it quite efficient, and the clients seem to like it as well. So, I hope they like it. There's sort of no option at the moment, but we're doing it face-to-face via Zoom, and it seems to be working well. And we've been quite busy with it too. So it's been a real surprise.
And the real paperwork things now that people need to know, ultimately there's the top 5 things that, that everyone's going to need. We do hear out there quite a bit when buyers are talking about getting finance that they thought they had everything in place, and then they've told us over the phone, oh, look, I've had to have, my broker's asked for additional paperwork.
Yeah.
Are you finding that it's just better off to get all that up front so that you've got everything you need before you even really get going?
Yeah, it is. We've got quite an exhaustive list, and we've got systems in place to help people gather that. So bank statements, for example, we've got a system that will go and collect it all for you, so people don't have to rat through everything. So it's actually easier than it sounds. But it's absolutely better off providing everything you need up front, talking to your broker or your bank about the full situation, and just checking everything off that could possibly be requested. And then you're more ready to go when the time comes. Because when you found a place, you don't want to muck around. You want to buy a house.
That's right. Well, and we're finding buyers are now, because a lot of properties are for sale and not auction, if a buyer likes it, they're putting in a strong offer. If the owner likes it, it's selling. So, waiting around for a couple of weeks for another buyer isn't really something that most owners are entertaining. However, because we can do open homes now and auctions, with auction coming back into the fold, obviously there's that competition around buying under auction conditions, which means it's an unconditional purchase.
Yep.
What's some advice you've got there around if a buyer wants to offer prior in an auction campaign where they would waive their cooling off? Yep. That's where they're going to, obviously, after they've signed off and paid their deposit, the bank will do a bank valuation.
Yep.
Are you seeing anything from bank valuations coming back that are not in line with the market? Are you seeing that kind of thing, or what's your advice around buyers buying at auction?
First of all, with the auction is to get a pre-approval with a lender who actually assesses the application. Now, that might sound obvious, but a lot of lenders just won't assess it. So you can send in the application and your pay slips and everything, and 10 minutes later, you get a letter saying the loan's pre-approved, but it hasn't been checked. So the fine print says, we'll check this once you found a place. And then they come back asking questions, and there is seriously nothing worse than that. Once you've found a house, especially if you've bought at auction, and without a loan approval, that's a stressful time. So we help work out which lender will fully assess it. We get the loan fully assessed. In terms of valuations, I wouldn't get a valuation done prior to the auction because we're seeing the valuations come in okay. Now, the only variance on that would be new properties, brand new properties in a development unit complexes or something. They're coming back. The ones I've seen across Sydney are coming back with higher risk gradings. And it might be because where there was 5 houses, there is now 300 units. So the value is saying, oh, we don't know what's going to happen here with everyone's job and the economy. So we're putting a higher risk grading on. And that can turn some lenders off. But very rare, very rare.
And what we found, I mean, obviously, before everything sort of started with what's going on, we found that when properties were sold at auction, most lenders did come back with a valuation at what the property was sold at, probably because I guess it was fought and competed after it was on the market openly. Everyone had a chance to buy it. And I guess, if you're going to try and prove what a property's worth, an auction really does deliver that. Whereas I guess if it was a for sale property, it does put a little more pressure on the lender to work out with a bank valuation is to, is that a fair price with comparable sales and things like that. So at the moment, you think probably now let's come back in, maybe more business as usual. They're still doing the same thing, the same kind of checks, but ultimately a good piece of advice is that what you're saying is make sure that you're getting the proper pre-approval, not just a quick one.
Yeah, absolutely. It's also worth noting that a bank valuation is there to tell the bank that the client is paying market value. It's not there to dictate what the market value is. So the banks now, as a rule, pretty much won't value a place that you want to buy before you've actually bought it. Yeah. So the value is going out there saying, well, is it really worth what these guys are paying for it? And the vast majority of the time, it's all okay. So it's very different to say a real estate appraisal, where you might speak to a client and give them an idea of what the market's doing. The bank's got no interest in what the market's doing. They just want to know if that property is worth pretty much what the client's paid. And it's very rare that we see a problem with it.
Okay. So with new buyers entering the market, what would be your best piece of advice you could give them?
Get the pre-approval done, know your figures, know what you can do, and know what leeway you've got to go a little bit higher if you want to, so you don't get stuck. Get the pre-approval done, and then just do research. Go and see properties, look on the internet, see what's been selling. So when you do find the place that you love, it's not such an emotional buy. It'll obviously will be an emotional buy, but there needs to be some facts and figures around the decision as well.
Yeah, and then, definitely. I mean, we see buyers out there all the time when they first enter the market. I guess they're trying to work out whether something's worth something, and they're always worried about whether they're overpaying. But we do try and explain to them that, it isn't really a negotiation real estate in Sydney market. It is a competition. Yeah. It's such a, well thought after, a marketplace. So really you do have to come first to buy a property. So you will be that person that pays a little bit more than anyone else. And that's something you probably need to be prepared for. Otherwise you'll just watch other people buy homes all the time.
Yeah.
So, and what's interesting about it is all the people that they love and trust or respect or use in a professional way, all try to give them advice on how not to pay the most for a property. But ironically, when those people bought, they actually did themselves as well pay the most. So it is something we need to sort of unlock buyers from and say, look, if you really want a home, let's focus on, if it's suitable to you and you do want it and it feels right. And if it does, let's guide you with where the genuine interest is and where you'd need to be to secure it. And I think that gives them the best fighting chance. And, those buyers that adopt that strategy and say, look, I know I need to go that little bit higher than everyone else. They get what they want.
Yeah. And the thing is, it's only a little bit higher too.
That's right.
So it's you're not talking $100,000 higher in most cases. It might be $5,000 higher. And just, or thereabouts, and that just might be what it takes to get the job done. And then if you're in that property for the next 10 or 20 years, the cost is long forgotten.
That's right.
As long as it's within your means to repay.
Now, a big question I've got too, which is probably the last big one I'll throw at you today, but there's been a little bit of press about talking around about stamp duty exemption.
Yeah.
What have you heard of that, and how do you think that? What have you? I mean, I don't think that's in place yet, but what are you hearing there?
It's not in place yet. We haven't heard any industry whispers yet, other than if the stamp duty was taken away, they may introduce a land tax to make up for it. So it would be great if you're going to be buying. It would really help first home buyers not having to pay that massive tax up front, regardless of the purchase price. But over time, you'd end up paying it back. And from a government point of view, it's probably a great idea. Instead of someone spending 30 grand on stamp duty, they might end up paying 100 grand over the life of the property.
Right. So again, a bit like the banks, you will catch up. It will catch up you in the end. But what we've seen is anytime they give a grant out to buyers in the marketplace, they tend to spend it fairly quickly.
Yeah. Those people that have paid stamp duty won't be asked to pay that land tax. So it'll be interesting to see what happens. So it'll be really interesting. I know a lot of people are happy about the thought of it. It's just going to see the devil's in the detail.
Yeah, we'll see. If you're a buyer out there and you're serious about a property, you might be thinking maybe I should wait. But I think what we'll see is if there are buyers out there that they do bring that into place, we'll see people compete for that fairly quickly. Because ultimately, if another buyer wants a property too, they're going to use that saving that they're getting up front. They're going to use that to help them secure the property.
Yep.
And then if another buyer tries to do the same, they end up going to eroding that saving in order to secure the property. So we might see prices go up very quickly in real estate if that was to occur.
Yeah. Yep.
Or at least stop them falling further if some of the other things we're talking about earlier come into play. So
Yeah.
yeah.
Yeah. No, it'd be really interesting times all up. How's everyone in your office going? Like, you're all working remotely, or you're in the office?
Yeah, at the moment I'm in the office. Look, the office is adopting all the right strategies that we have to. So yeah, remote working is something that we're still doing, and it's been, again, that's all those little disciplines that we've had to add on to allow us to do that.
Yeah.
And keeping all the right social distancing measures around it when we are in the office and things like that. But there are times when you need to come in and do some certain things like
Sure.
yourself.
Yeah, absolutely.
But ultimately, the good thing about real estate is, a lot of the time it really doesn't matter where you are. You're really on the phone, and you might be visiting someone's house, or you might be doing an open home, or not an open home, but a buyer appointment or something of that nature. So, and a lot of the things we do now are digitally and remote. So, putting properties online and advertising them, it's all done remotely. And so most of the time we don't really need to be in an office to conduct real estate. There are just times when, it's easier to, like, for example, doing a meeting like this, a bit easier with Wi-Fi to do that.
Yeah. Good one. All right. Well, thanks for your time today, mate.
No worries. It's been great.
I've been watching your progress, and your social media is excellent.
Thank you.
You're doing great work, mate. And I do appreciate your time today.
And I think what people don't realise is behind you there's a little board, and it's very hard to see, but there are about 1 million little pinpricks on there all across the Shire of all your clients. So I think that's a great testament as to how well connected you are out there in the marketplace, and how many people trust your services.
Yeah, all the houses we've helped settle, or anything to do with it over time. So yeah, interesting stuff.
Really good.
Well, mate, again, thank you for your time.
No worries. Good luck. We'll talk again.
We'll talk again for sure.
Sounds great.
See you, mate.
Thanks, Ben.